I have not failed. I've just found 10,000 ways that won't work. Thomas Edison. And of course, Thomas Edison never gave up. Someone asked him one time if he had not discovered the filament that worked in the light bulb, and it was after thousands and thousands of tries, what would he be doing? He said, I'd still be in the lab looking for it. So again, kudos to Mr. Edison for his perseverance. I believe he also said that genius is 1% inspiration and 99% perspiration. My friends, if you're not willing to give up, you will win. Victory goes to those who persevere. The most lacking of all human traits, perseverance. 10 to 15 minutes a day is all we ask here. Great stuff to bring to you in the market today. Everything down but 20-year bonds. Very interesting. We're going to jump in and see what we see. Let's first go to SPY. Oh, at the top of the screen right now, you will see a link to buy our book. Following that, there'll be a link up at the top of the screen for information on the Accelerated Market Mastery course. Had great conversations with potential students today. Spend about 30 minutes with you. If you're interested, reach out to us, CW at chartingwealth.com. We interview students for that program. So, what have we been talking about with the S&P 500? We've been talking about the weakening that started occurring when? All the way back on the week ending in mid-June, the 12th of June. We talked about that. It was a red open box candle followed by a solid red spinning top, showing you a slowdown first in the up movement, and then the next week, which was the week ending the 19th of June, we saw that solid red spinning top, which means more indecision tending down, and we also saw how we had penetrated the 2-day trend line and how we were penetrating by the end of the week the weekly trend line, and how this week started off penetrating the weekly trend fully. And we have sort of a green doji at this point. Again, lots of indecision. What we pay most attention to is look how we were pushing through the 200 period moving average line. Now we're weakening and dropping right off on it. So that is interesting. Down for the day 2.55%. Derivative oscillator's been losing momentum since it peaked on the peak week. Actually a week before the peak, but the derivative oscillator, which is our leading indicator, peaked on the week ending the 5th of June. I think it went a little higher. It did the following week, but it also started losing momentum then. And that's, of course, what the leading indicator indicates, the derivative oscillator. And so we see things weakening. Again, we had all those weeks of green up movement, and then things started hiccuping. And look at what we've had happen with the 2-day chart. We've seen it now cross over going down. Does that mean that you jump into a down move? Of course not, but it is significant. And again, as you're attempting to learn how far to ride things, how far they will go when weaknesses occur, you can go back and study what happened on the 2-day chart when we had that solid red down candle after things topped, followed by another red down candle and a sideways slide, and then a penetration here on this latest 2-day candle of the weekly trend line. There are many warnings there, and now, of course, we have had the crossover going down, representing Tuesday and Wednesday on the 2-day chart, and that, of course, would pull us out of any up trade. I mean, this would be the last ringing bell for getting out of an up trade on SPY. Now, it could recross back over. If it does that, that might give us a good reason to jump back in. There may be good reasons not to. We look at the half-day chart. I used to call it the 4-hour, but it's actually now we're using TC2000 charts, not the freestockcharts.com. This is the paid version. It'll cost you a few dollars a month, but it's totally reasonable. And they have a web-based version, which is what I use. I don't download any other software. I use the web-based version. I can use it anywhere in the world on anybody's computer. It works great, and you don't have to download any software. And of course, this is the 195-minute chart. We see it has pushed through today in the morning. I mean, really just shoved right through the weekly trend line, dropped in the morning and in the afternoon. Price percent oscillator pulling away from the red signal line, derivative oscillator going down too. So lots of weakness occurring there. We saw it coming early. We talked about it. And then, of course, it came to fruition on Wednesday. We look at the Qs. Now, the Q's a little different animal. It was down also, not as much, but close, 2.06%. What do we see there? Well, we see huge green up candle, still have a green up candle. We've still reached a higher high for the week. We are above the weekly trend line, just at the 2-day trend line. Price percent oscillator still heading up nicely. Derivative oscillator losing momentum. Price percent oscillator losing a little bit of its momentum. Go to the 2-day chart. Hasn't crossed over yet, but that may be on the way. We saw 4 days of weakness back on the 2-day candle ending the 12th and the 16th of June, but then followed by 6 days of up movement. Things have been weakening, though. We look at what's happened on the 4-hour chart. Red down candle in the morning. Did have a long wick on the bottom, little wick on top. In the afternoon, no wick on the top, just solid, pushing through the old 2-day trend line, still above the weekly, crossing over in the afternoon, going down. So again, some real weakness showing there on the smaller charts, but that weekly chart still looking pretty decent. Does appear to be getting close to a crossover going down on the 2-day. So if you're still in your up trade on the Qs, it has done very, very well for you. Just keep a close eye on that 2-day chart. You have ridden it well. Pay attention to that 2-day trend line for violations, and particularly that weekly. The next 2 days are going to be telling for you on your Qs trade whether or not you choose to close it out. Look how long that 2-day chart has been moving up. Go all the way back to early April. Amazing, and amazing how well it has done. The jumping in point, oh, let's see, somewhere around the 216 mark, up to a high of 251.15. Boom. Wow, beautiful. Okay, we're going to go back to the weekly, and we're going to go to bonds. What do bonds show us? Well, we see bonds are up for the day, 1.07%. Now, we had bonds crossover going down back on the week ending Friday, the 22nd of May, down for 2 good weeks after that. And then it's really been tracking sideways and up since then. Price percent oscillator still heading down. Derivative oscillator losing some downward momentum. It's important that we see this week pushing through. We've been talking about this, the 2-day and the weekly trend lines. Those are warning bells. Now, we do see the price percent oscillator has lost a whole bunch of energy since it peaked going down back on the week ending the 5th of June as far as the angle goes, and then it's flattened out, still heading down though. But we'll pay close attention to everything. Derivative oscillator losing downward momentum. Now look at the 2-day chart. Warning bells will be going off if and when it crosses over going up. We see that the derivative oscillator has gone positive, but we don't have a crossover yet there. But look at what's happened. Penetrated the 2-day, sitting right there on the weekly. So lots of weaknesses there. Lots of reasons for you to, again, be paying close attention to what's happening on the 2-day chart. And the half-day chart, that's where we saw things had dropped through back on the 23rd in the morning and in the afternoon, and then that was Tuesday, and then on Wednesday pumped back up through, busting through the weekly and the 2-day trend line. So keep your eye on TLT. It had been good to us, but again, substantial weakening occurring. And again, if that 2-day chart crosses over going up, that's going to give us a good warning as to where things are headed. Now, We go to gold. Look at gold. It crossed over and slid sideways and has been inching up. So far this week is a big green up candle. Look at the price percent oscillator. It is laminated over the red signal line. Derivative oscillator still negative. Now again, there was a lot of downward momentum in gold. And what has it done? It's broken out of its range. Its range was from 58 to 64, and it's pushed through that. Closed the day at 65.90, a high so far this week of $66.99, so right at $67. Now we go from the weekly to the 2-day. Expected it to cross over, but it stalled. Down for the day 0.35%. So we see this latest 2-day candle, a big green up candle, blowing through it. The prior candle had pushed through the Bollinger Bands. This latest one really hammered through it. Derivative oscillator went green, but not enough for the price percent oscillator. What is it going to do? Is it going to cross through over the next 2 days, or is it going to bounce off? We'll watch, pay close attention to that. If we have that bounce off, that might be a good signal that indeed we might not be totally failed by the weekly vertical crossover. If so, it will be the 12th weekly vertical crossover for the year and our first one that did not work. That still puts us at 90, what would that be, 97 something percent? The engineers would know immediately. So let's look at what the 4-hour chart is doing. Now we saw the 4-hour chart start hammering up back on Friday the 19th. And of course, it appears throughout the course of the day to be slowing and pushed through the 4-hour trend line at the end of the day. Again, not putting a lot into the 4-hour chart, but just watching and really paying attention to what's going to happen on that 2-day, which is going to dictate whether things stay laminated and pull either up or down on that weekly chart. Folks, that's where we are as we end the day with our 4 big charts. We so appreciate you being with us. If you aren't signed up for the Accelerated Market Mastery course and are interested, watch the video. We'll have that link again at the end of today's program, and we're happy to talk with you about that. If you hadn't purchased our book, second edition, now available. Got an autographed copy for you. Sending out copies all over the world and all over the States. So glad to get one to you. Follow the link in the show notes. And if you'd be kind enough, subscribe to our YouTube channel. Click the bottom right-hand corner of your screen. Let's jump into the last 3 charts for those who are interested. Bitcoin, real estate, and oil. What do we see with Bitcoin? Well, we're going to start with the weekly chart. And it's been sliding sideways since it peaked all the way back on the week ending the 8th of May. And really just sliding sideways since then. Price percent oscillators heading so slightly, well, it's pretty flat right now. And derivative oscillator losing upward momentum. Go to that 2-day chart. It's continuing to move down. Derivative oscillator also gaining downward momentum. Down for the day 3.48%. And of course, in that 4-hour chart or half-day chart, we can see Bitcoin really hammering down in the morning and then in the afternoon crossing over. So Bitcoin trying to figure out where it's going to go. We're going to have a recross going back up if there's any hope to jump back into Bitcoin and do any riding in the right direction. So pay attention to that. Now, let's move on to real estate. Real estate took a hit today, also 2.85%. Nothing like oil, though, down 5.12%. We'll talk about that in a second. What do we see, though, with real estate? This is the Real Estate Investment Trust from Vanguard, the largest in the world, exchange-traded fund. We have a red down week, red candle, little bit of a wick on top, long wick on the bottom. Price percent oscillators just continued to lose momentum since it crossed over going up on the weekly chart. Back on the week ending the 29th of May, it popped up the next week and the next week, and then over these last 2 weeks has just really started to lose that momentum. You can see where that second week after the crossover, it really had the most of its momentum, and then it all started slowing since then. About flat now on the price percent oscillator, derivative oscillator losing momentum too. Go to the 2-day chart. That's where you see a whole lot of the dive occurring. And of course, this latest 2-day candle, down candle, wick about a little bit longer than the candle itself, solid red. And we see it getting close to crossing over, going down. Hasn't happened yet. Derivative oscillator trying to go negative on us. We look at the half-day chart. The real downer happened in the morning, followed by a little bit of a pullback up some, so the losses weren't as great as they were in the morning. Derivative oscillator gaining downward momentum, price percent oscillator heading down. So real estate not doing so well at this time. We'll continue to watch. I don't expect it to do well for a long time. But again, what does it matter what I think? It only matters what the charts say. USO, and hey guys, thank you for all the recommendations in other oil funds to go to. I will definitely go through those over the weekend and pick out which one we're going to go on. We see that oil was trying to cross over, going up, USO, but it just lost lots of its momentum today. Why? Because it was down 5.12%. Boom, that's a hammer blow right there. And we still have a bit of a green up week. Derivative oscillator gaining upward momentum. Price percent oscillator not where it was yesterday. We see on the 2-day chart a red spinning top, which means a slowdown in the up movement most definitely. And the price percent oscillator continuing to move up some. Derivative oscillator losing lots of upward momentum. And on that half-day chart, we saw where things really hammered down in the morning and then sideways in the afternoon, a little bit of a pull up, I would call it, rather than a pull back, a pull up in the down movement. So that's where we are as we end the day. Thanks again. Oh, got a great training for everyone who is a subscriber. If you're not a subscriber, you're not getting this training, and it's for free. Just go to the website. Go to chartingwealth.com, sign up for free. Today, cutting losses is the key to winning. That might sound counterintuitive. It is not. And I want you to take that training, please. It'll take you just a few minutes. Very, very helpful. Got nice graphics in there. I put that together a few weeks ago for you. Please take it. That's where we are, folks. God bless you. Take care of yourselves. We'll be back tomorrow, God willing.